Digital currency refers to a form of currency that exists only in digital or electronic form, as opposed to traditional physical forms like paper money or coins. This modern financial instrument utilizes blockchain technology for decentralization, immutability, and transparency, enabling secure and swift online transactions. As nations and tech innovators gear up for a digital future, digital currency emerges as a vital part of global financial ecosystems. The significance of digital currency in the context of: is digital currency the Trojan Horse for world domination? Lies in its potential to reshape global financial structures and influence geopolitical power dynamics. By enabling faster, cheaper, and more inclusive financial transactions, digital currency facilitates global economic integration while simultaneously challenging traditional banking systems and sovereignty of national currencies. A prime example of digital currency's global emergence is Bitcoin, the pioneering cryptocurrency that demonstrated the viability and potential of digital currencies in achieving decentralized financial systems. Another illustration is China's development of the digital yuan, an initiative by the Chinese government to create a state-controlled digital currency with the dual aims of modernizing its economy and gaining influence over global financial systems. Supporters of digital currency, including tech enthusiasts and financial innovators, argue that it promotes financial inclusion, enhances cross-border transactions, and offers a hedge against inflation. They see the decentralized nature of cryptocurrencies as a means to democratize finance and reduce the control exerted by traditional banking institutions. However, significant challenges and controversies surround digital currencies. Critics warn of security vulnerabilities, regulatory uncertainties, and the potential for illegal activities like money laundering and tax evasion. Furthermore, there are concerns about national sovereignty, as widespread adoption of digital currencies could undermine traditional financial systems and monetary policies. Alternative viewpoints highlight environmental issues, as the energy consumption associated with mining cryptocurrencies like Bitcoin is substantial. This point on digital currencies' emergence is deeply connected to the broader theme of economic control and influence. As digital currencies become more prevalent, they affect trade, investment, and power structures. They pose both opportunities and threats that could potentially lead to a realignment of global economic power. Whether digital currency will indeed become the Trojan horse for world domination by certain entities remains a question of intense debate and observation. The concept of the historical context and evolution of monetary systems delves into how societies have exchanged and valued goods and services throughout history. Monetary systems have evolved from barter systems to complex financial instruments and digital currencies. Understanding this progression is crucial for examining the notion that digital currency might act as a Trojan horse for world domination, as it situates current digital trends within a historical framework, offering insights into both the possibilities and perils they pose. Historically, monetary systems have transitioned from tangible goods like precious metals to representative money, such as banknotes backed by government credibility. With the rise of electronic banking, money became more abstract, and the emergence of digital currencies like Bitcoin represents the latest evolutionary step. These changes in how value is perceived and transacted play a pivotal role in global power dynamics. For example, the Bretton Woods system established the dollar as the world's reserve currency, demonstrating how monetary systems can consolidate power within specific nations. The rise of digital currencies presents specific examples that illustrate their potential global impact. Cryptocurrencies like Bitcoin have challenged conventional banking by enabling decentralized, peer-to-peer exchanges without intermediaries. Meanwhile, countries like China have developed central bank digital currencies, CBDCs, aiming to internationalize the yuan and potentially reduce reliance on the US dollar. Proponents argue that digital currencies can democratize financial systems by offering greater access and control to individuals, potentially decentralizing global monetary power. However, detractors warn that digital currencies could lead to increased surveillance, loss of privacy, and economic instability if not regulated properly. This reflects a core controversy: whether digital currencies usher in empowerment or increased control, particularly by state actors or influential corporations. The evolution of monetary systems is intricately connected to the main topic of digital currencies as potential tools for world domination. As societies transition toward digital economic frameworks, the entities that control or influence these systems stand to gain significant global power. This idea feeds into broader discussions on technological sovereignty, governance, and economic equity, raising questions about who benefits and who loses in the digital age. By understanding the historical evolution of monetary concepts, one can better assess current and future implications of digital currencies on global politics and power structures, highlighting the delicate balance between innovation and hegemony. The technological foundations of digital currency form the backbone of this innovative financial ecosystem, characterized by technologies like blockchain, cryptography, and decentralized networks. At its core, digital currency operates on a distributed ledger technology, most commonly the blockchain, which is a decentralized database that records transactions in a secure, transparent, and immutable manner. Blockchain ensures that digital currencies such as Bitcoin and Ethereum are not controlled by any single entity, thereby promoting openness and reducing the risk of centralized corruption. Understanding the technological underpinnings of digital currencies is crucial when discussing their role as potential tools for global influence. These technologies enable seamless, borderless transactions that challenge the traditional financial system, which is often controlled by centralized banks and government authorities. This disruption could potentially enable new forms of control or power dynamics on an international scale, aligning with the concept of digital currency as a Trojan horse for world domination. Real-world applications of these technologies include Bitcoin's use as a decentralized store of value and medium of exchange, where its blockchain ensures transaction security and transparency. Additionally, Ethereum's smart contract capabilities allow for programmable, self-executing contracts without the need for intermediaries, impacting various sectors from finance to supply chain management. Proponents of digital currencies argue that these technological advancements democratize finance, offering financial services to the unbanked and creating a more equitable economic landscape. They emphasize the empowerment of individuals with financial sovereignty, free from institutional manipulation or geopolitical constraints. However, the technological foundations of digital currencies are not without challenges and controversies. Critics highlight issues such as scalability, energy consumption, and susceptibility to criminal activities. Furthermore, the decentralized nature poses regulatory challenges for governments accustomed to controlling monetary systems. Some skeptics view the rise of digital currencies as a threat to national sovereignty, where nations might lose control over their monetary policy to decentralized networks or entities with significant digital currency holdings. In the context of world domination, the integration of digital currencies into mainstream finance could redefine power structures and economic control, influencing everything from global trade to individual privacy rights. This interconnection with global power dynamics raises questions about the future of national currencies, regulatory frameworks, and the potential for new economic hegemonies to emerge. As digital currencies continue to evolve, their technological foundations will remain a pivotal factor in determining their role on the world stage. Digital currency as a tool for economic manipulation refers to the strategic use of digital money, such as cryptocurrencies or central bank digital currencies, CBDCs, to influence and control economic activities and outcomes. This concept is significant in the discussion of digital currencies as a potential Trojan horse for world domination, because it highlights how these currencies can serve as instruments for centralized power structures to exert unprecedented influence over global and domestic economies. One example illustrating this point is China's digital yuan, which has been developed to strengthen the country's control over its monetary policy and expand its influence internationally. By promoting the use of the digital yuan, both domestically and across its trade partners, China can reduce dependency on the US dollar and potentially shift the balance of global economic power. Moreover, digital currencies like the digital yuan enable real-time monitoring of financial transactions, giving governments increased oversight and control over economic activities. Another example is the potential for governmental entities to employ CBDCs in implementing monetary policies more effectively. For instance, digital currencies could be used to apply negative interest rates directly on individual deposits, encouraging consumers to spend and invest rather than hoard money. This level of control over personal finances magnifies the central authority's ability to manipulate economic behaviors and outcomes. Supporters argue that digital currencies can enhance economic efficiency, promote financial inclusion, and provide central banks with better tools to stabilize economies. However, these advantages come with significant challenges and controversies. Critics highlight concerns over privacy erosion, as digital currencies can allow governments to surveil and control financial transactions, limiting personal freedom and autonomy. Additionally, decentralized cryptocurrencies like Bitcoin challenge this narrative, offering an alternative to centralized financial systems. Advocates of cryptocurrencies argue for financial sovereignty and privacy, opposed to the control central banks wield. The potential for economic manipulation through digital currencies connects directly to the broader theme of digital currencies as a vehicle for potential world domination. As governments explore ways to leverage digital currencies for greater economic control, the risk of centralization and loss of individual liberties becomes increasingly poignant. This control underlines a crucial part of the debate. Are digital currencies paving the way for a new era of economic empowerment, or leading us toward unprecedented oversight and dominance by a few powerful entities? Understanding these dynamics is essential as we navigate the future of global financial systems amidst the rise of digital currencies.